Have you ever heard the saying, every trading strategy works? The most important thing you need is a trading psychology, and you can actually trade with any strategy, trade from any time frame, any point of view you want. In today's video, I'll be taking you through a simple scalping strategy I developed over the years. When I started my journey of Forex, this was the very first strategy I actually developed and was using. I was extremely fond of it, and for almost a year, this was literally the only thing I used to take trades. And even as an experienced trader, from time to time, I still go back to this simple strategy I use, and it was actually a chart pattern I actually developed. So as Forex traders, just learn to understand. Like I said in my previous video, stick to the basics. If you're doing something and it's extremely simple and it's making you money, make sure you keep doing that. You can choose to fine tune it or develop it into a much more stronger strategy, but if it works, don't spoil it. In Forex, I have a saying I always tell my mentees that if it ain't broken, don't fix it. I'll be taking you through this simple trading strategy I use, and trust me, when you see it, you'll even be surprised, because I'm sure you've actually seen it so many times play out on the charts, but you actually don't know what to do with it because maybe to you it's insignificant. But to me, it has actually served me a very, very long time. So I'm still extremely loyal and faithful to this particular strategy. Before we jump into the charts, as always, make sure you're subscribed to the channel. Also, make sure you like this video and share to as many traders as possible. Also, make sure you hit the notification bell so you get notified anytime I go live or drop a video on YouTube. We'll be right back. There was this simple chart pattern I identified. Like I said, it's something I've been working with for about 4 years now. It was the first ever trading strategy I actually used. It's actually a simple continuation strategy. If you remember the trading technique video I made, I talked about the market having continuations, reversals, breakouts, and all. So in today's video, we'll be looking at one of my continuation strategies. It's a simple personal strategy of mine I've used for a very long time, and it's a simple bearish continuation and then a bullish continuation setup. So let's go into the chart so I show you the psychology behind my taking this particular trade and how I developed this strategy and how I was able to make this blossom by embedding it in my trading strategy. Remember, like I've always said in my previous videos, anytime I open my charts, if I want to actually trade with resistance support, I always want to identify my most recent high as my resistance, as well as my most recent low as my support. So I keep adjusting as the market keeps breaking these levels and fail to give me any trade on them. So if you look at this particular chart, what do you see? You actually see this, and this trade was actually on gold. So if you look at this particular chart on gold, I actually started doing my markups last week, trying to find trading opportunities because that's how I trade. So I have my resistance up here, I have my support down here. So what do? Once I mark out my various zones, I have my trend line here waiting for my third touch. What I have to do next is simply just wait for the market to react to my key levels. You see, it got to this particular support. And what do we always expect when the market hits our support? We expect the market to give us an opportunity to find a buy on our support. So as you can see clearly here, I was actually looking for an opportunity to take a trade on my support, stop loss right below the range, expecting the market to travel all the way up to the next resistance. But like I said, you know, where as day traders, you can easily identify our various take profit levels in between the ranges simply by employing market structure. So if you look at this particular chart on gold, this is what I was expecting. I was expecting to see any sort of consolidation or a bullish confirmation here that gave me the clear indication the market was going to actually reverse and go for a buy to the upside like we have here. I simply just wait for my confirmations because now the market has bounced on my key level. I'm waiting to see how the market will consolidate on this key level, as well as how the candlesticks will play out here. That gives me a clear indication the market is about to move in my favor. But what happens now? The market just runs through our support, goes to touch the trend line, and then comes back. So now it gives us a third touch on our trend line. There's no single bullish candle. That gives me a clear indication of what the market is going to do. What do I do next? Now I just employ the chart pattern I was telling you guys about. So this chart pattern is actually for continuations. It means that if the market is going for a buy, I'm expecting it to keep going for this buy. And if it's going for a sell, I'm also expecting it to keep going for this sell. And the reason why this place was a key level to me, was a key zone of interest to me, was because it happened to be a support. Meaning that what a lot of people were probably going to look for buy opportunities in this zone. It was much more likely for it to keep going than for it to reverse in that zone, since I was not seeing any bullish candle or any bullish presence on this particular setup. So like I said, I employed this particular chart pattern. And with this particular chart pattern, this is how it looks like. When the market gives me a huge drop like this, I normally expect it to pause a bit and then give me a few candles in here. That helps me see the pause on this particular setup. So it just pauses here a bit by consolidating with a few candles, sometimes 3, 4, 5, sometimes even 6 candles. So once it consolidates this way, what I mostly expect to happen now is this consolidation It's normally happening because the bulls and bears are looking to see who will gain control over the market, whether it's going to reverse after the bearish move or it's going to break out and keep dropping. So what I normally expect with this particular chart pattern is I normally expect it to break out and go on the downside again. So now if you look at this particular chart, you realize that this is what I'm expecting to happen on gold. It means that now I can easily draw a box, either a square or a triangle, through the consolidation this way, because now it becomes my bearish continuation pattern. So the simple name I give to this is my bearish continuation pattern. Huge drop, it will consolidate a bit, about a few candles will consolidate in this zone, then it breaks out and actually drops back down. You can also have a scenario where the market will rather go for a buy this way, pause and consolidate here, giving you, let's say, about 4 candles, about 5 candles will consolidate in this zone this way. Then it ends up finally breaking out and going for the buy. So you realize that it's a bullish continuation and then it's a bearish continuation like we have down here. So now let's go back to the charts. Let me explain to you how things ended up playing out for me. And I was expecting the market to consolidate here. Since I wasn't seeing any bullish candle, I was expecting it to consolidate here and then drop back down in my favor. I was actually taking my sell here, stops right on top of the range here, and then expecting it to go at least to this particular support. So I had my initial take profit here, meaning that if the market dropped to the trend line, what I will simply do is to just adjust my stop loss to the entry price here. That's simply what I'll do. So now if the market drops my trend line from me, I simply just adjust my stop loss to my entry price. Then I take my first profit here. Then now I wait for the market to simply do the rest. If I want to keep holding, what do? I simply just keep adjusting my stop loss. I keep adjusting my take profit as the market keeps going. So let's look at what our first candle does. So our first candle literally gave us almost 90 pips, ran through the initial take profit I set for this particular trade, and then pulled back a bit. So what did I do? I simply just adjusted my stop loss to entry, brought my stop loss back to where I actually took this trade. Now I'm running a risk-free trade. If the market is going to use this trend line as a third touch and then give a confirmation here and go up, it means that I'll basically close my sell positions at break even and then take a buy with my trend line. I was either going to use my trend line as a reference point to catch a buy, or if it breaks the trend line, I hold my sells and then make my profits with the sell position I took initially with a simple chart pattern I just showed you guys. So our next candle basically just runs through and goes to hit our next take profit, which was what? On our support. Everything I do, I actually embed market structure into it. Every decision I make. The reason why I expect the market to pause or rest or get to where I expect it to get to is as a result of the structure of the market. So if you're a forex trader, if you want to be extremely successful as a technical analyst, market structure is everything. That's the number one nugget I'll give to you. Market structure is everything. Understanding the structure of the market makes it extremely easy for you to make decisions as and when the market keeps moving. It means that now that the market has hit this price, we can simply place a new level here, expecting it to go all the way down. That's if you want to keep holding it as a swing trade. I'm already in about 125 pips profits from my entry. So basically I can hold my trade as long as possible without having to go through any stress. This is what we call a stress-free trade, because if anything happens and it goes against you and it reverses, you'll be taken out at break even. But one thing I want to admonish you on is to always make sure you take partial profits if you want to keep holding your trades for as long as possible. If you want to swing any trading position, make sure you take partial profits. Now that the market has actually gotten to this support of ours, we want to see how it will actually behave in this zone, whether it will use it as a reference point to reverse and go up for a buy or break and go down. And then one very important thing about the strategy I was talking about was that it normally happens after a long drop. So long drop, consolidate drop, long drop. It normally happens after a long drop or a long rise. So anytime I see an extremely long candle, if I expect a reversal on that particular candle, write this down somewhere because this is an insane nugget. Anytime I see a very long candle, whether a bullish or a bearish candle, if I'm to expect a reversal on that particular candle, the next candle after that should be of extremely similar heights, taking it back to the opposite direction. As you can see here, you realize that here we had a long candle send the market up. If the candle which forms after this are smaller candles, I'll expect it to break out and go up. But the reason why I believed the reversal on this particular move here was because the candle which formed after this particular bullish candle was an extremely long bearish candle as well. So it means that if I expected a reversal on this gold move here, on this bearish move you see in this particular candle, it means that the reversal candle should also be what? Equally long. If it's small candles consolidating here, I'm expecting the market to what? Keep going down. So let's look at what the next candle does. So you see a small candle what's breaking out a little out of the zone, another one breaking. So the moment I see this, the moment I see something like this, it's my key to, it's a key to tell me that the market is going to keep going down, because the next candle was not a long candle. It was also what? A smaller candle. Plus, it was even a bearish candle. So once it's a bearish candle, what does it mean? It means I'm seeing another form of consolidation here, which can also be what? Termed as my simple bearish continuation pattern, expecting the market to keep going down. We keep going down. Now, once it keeps going down, remember market structure, most probably expecting the market to get to this particular level. So as you can see clearly here, I could have easily added another position here. So if you want to actually practice or learn how to actually stack or add positions, this is how you can do so. You don't just add positions because you feel in your heart the market to keep going in that direction. Price action of that particular pair should actually tell you the market is going to keep going in a certain direction before you decide to actually add more positions on that. So here you could have easily decided to add more positions when this consolidation was done and it broke out. So now you realize that this particular trade I took here, I could actually hold it through this whole place because what, I wasn't seeing any bullish presence. And also the candlestick that formed after this long bearish candle was not a long bullish candle. So I'm not even pressed at all. I'm not even stressed. I can keep holding it. So how many pips have we made so far on this particular trade? We've already made what? Over 200 pips already on this trade. So now let's see if we will keep going to that support of ours. Let's see if you keep going to that particular support you're expecting it to get to. Then it just smashes and runs through that support. So this new position, if you had added a new position when this candle closed or when this candle broke out of this support, that new position alone should have put you up over 200 pips. So we don't have any turning point next, but still we want to see if the market will consolidate here and then drop again, or actually you have a long candle which will just pull it back up. So what does the next candle do? You see another form of what? Consolidation now. So you want to actually see the market break out of what? The zone, break out of the consolidation before you take advantage of it to trade it. So every single candle of this consolidation is indicating what? Towards the market going back down, because similar happened here, and now similar is also happening what? Here. We have this candle what? Closing below what? The lowest price, which was in this particular zone. So now I'm taking another short position here, which is what? Another simple day trading technique. So you realize that this same swing position I actually took on Tuesday, I can keep adding positions as and when the market gets to the key levels where I expect to see continuations on. So now taking this trade here, my stop loss is what? Right on top of the wick up here, right on top of this consolidation. So my consolidation is in here. You can see my rectangular box here indicating what? My bearish presence. So first bearish continuation here after a long drop, second bearish continuation after another long drop, third bearish continuation after that. So let's say we are targeting about 100 pips up, because this is a simple day trading technique. If I was swinging from the beginning, I'll keep holding, but if it's a new position you're adding, you just add your new positions because you're looking for quick moves on this. And then the reason why I did it on gold was because gold actually presents easy money making opportunities because it's extremely volatile. So what do we see next on our candle? Boom, we smash our take profits. In summary, what we mean is it normally happens after a long drop or a long rise. When the long drop or long rise happens, what normally happens is you have a small consolidation. When the long rise also happens, you have a small consolidation. Then it just breaks out and continues the prior move again. And then for the long rise as well, after the small consolidation, it just breaks out and then continues the prior move. If you study a lot of charts on the market, you see so many empirical examples on this particular simple chart pattern. So like I said in the beginning, every single strategy works. It's just your psychology that enables you to understand when to apply that particular strategy. Every single thing that you feel is insignificant has some sort of importance on the market. Just learn to embed it in your trading strategy, and trust me, you'll be fine. There's no need for you to change your trading strategy. Just fine tune it, just develop it, just make it more advanced. This brings us to the end of today's video. I want to thank you very much for joining me in today's video. I hope this will be extremely beneficial in your trading journey. If you want me to shoot more content like this, make sure you smash that like button. Make sure you also hit that notification bell so you get notified anytime I drop a video or go live on YouTube. Also, make sure you're subscribed to the channel. I know there are a lot of viewers on here who are not subscribed to my channel. Make sure you subscribe to my channel so you are the first to receive my content anytime I drop them on YouTube. Also, keep up with me on my socials. Common Forex on Instagram, Common Forex on Twitter, Common Forex on Telegram, and then TikTok as well. There's a link in my description that takes you straight to my trading community, the Common Forex trading community, with over 10,000 subscribers, where I share daily trading nuggets, trading signals, trading knowledge as well. Enjoy the rest of your trading week. See you in the next video.